interest rates for the second time this year to revive weak economic growth and reinforce investment. India's central bank made its second interest rate cut to prop up the weakest economic growth in a decade. Governor Dewari Sabaru lowered the repurchase rate to 7.5% from 7.75%. Last week, Finance Minister Palani Appan Chidambaram called for cheaper borrowing costs after his budget targeted the narrowest fiscal deficit in 6 years to help mute price pressures. Anubhuti Sahay, economist at Standard Chartered plc, commented, "Growth slowdown and the government adherence to cutting the deficit are enabling the RBI to cut rates. However, further easing will be conditional on demonstration of further fiscal consolidation and retail inflation coming down from double digits." India is the only major Asian economy to lower borrowing costs in 2013. India's central bank say even as policy stance emphasises addressing the growth risks, the headroom for further monetary easing remains limited. Chidambaram has led policy changes since September to court capital inflows, curb fuel subsidies and speed up delayed road, rail and port projects. In a recent interview, he said India is reviewing foreign direct investment caps and may discard or relax many of them. The Statistics Agency forecasts 5% GDP growth in the fiscal year through March 2013, the least since 2003. Jyoti Narasimhan, economist at IHS Global Insight, said, "While the economy has bottomed out, the recovery will remain shallow and protracted." Costlier food and diesel supply bottlenecks and a drop in the rupee in the past year have spread living costs. Consumer prices are rising at the fastest pace in the group of 20 major nations. The Reserve Bank commented, "Although there has been notable softening of non-food manufactured products inflation, food inflation remains high, driving a wedge between wholesale price and consumer price inflation and is exacerbating the challenge for monetary management." The Finance Minister's goal is a budget gap of 4.8% of GDP in 2013 to 2014 from 5.2% this fiscal year as he tries to avoid a credit rating downgrade. India's Finance Minister says the current account gap is the bigger concern and estimates India may need more than $75 billion of foreign capital this year and next to fund it. The International Monetary Fund predicts 6% Indian growth in 2013 and 2014, below India's average of about 8% in the past decade. That's all for now, but stay tuned to Dukascopy TV for the latest financial news and updates. For now though, goodbye.